Welcome to the Rule Classroom Plus. This is Steve Barton, and thank you for tuning in. We have an extra special treat for you here today. We are back with Rick, of course, and Rudi Fronk of Seabridge Gold. Gentlemen, how are you?
Great to be here, guys.
Everyone's doing fine, Steve. Thank you. Nice to be back with you.
Yes, great to be back here as well. Rick, do you have any opening thoughts?
I do. I hope we do this sort of thing more often at the Rule Classroom. Not necessarily the expense of the Q&A, but the truth is that we need to bring in people from the industry, particularly people like Rudi, who've been in the industry for a very long time, to, if you will, expand the message here at the classroom. There's 24,000 something participants, and frankly, Steve, they need to hear from more than you and I. So I'm delighted to have Rudi here. Delighted to have Rudi coming to the upcoming Natural Resources Investment Symposium, which I hope we get a chance to talk about here. And once again, Steve, thankful and delighted for your participation in these Thursday sessions.
Yeah, I love doing it. This is a lot of fun to me. It highlighted my week. Okay, maybe I think everyone is pretty familiar with the KSM deposit, Rudi, but for anyone that isn't, maybe you can give us a quick overview of your project at Seabridge, and then we'll branch off from there.
Sure. Yeah, so KSM is located in British Columbia, an area called the Golden Triangle, immediately next door to Newmont's Brucejack project, so it's in a good jurisdiction. We've now spent over $1 billion on the project since we started working there in earnest in 2006. We've taken the project through the environmental assessment process. We have a number of construction permits in hand, and we've actually started construction activities at the project already. The next step for the project is to bring in a large mining company as a partner that will co-develop the asset with us. And why we think the time is right now, if you look at KSM, the 5 deposits we have there, KSM is now the largest undeveloped gold project in the world in terms of reserves and resources. It's a project that has tremendous capital efficiency, especially at today's metal prices. And it's a project that, if you ignore the gold from the critical metals perspective, it's the second largest undeveloped copper project in the world.
So number 1 for gold and number 2 for copper. Okay, so Seabridge has owned KSM for a very long time. What is different now in 2026 that makes you believe that this project is closer to a JV than it was 3 or 5 years ago?
Metal prices, first and foremost. These big companies that need new projects now have the financial flexibility, not only to buy back stock and pay dividends, but to start to look for their future in terms of what comes next. Here's a project in a safe jurisdiction, a project that's permitted, a project that has the support of the Indigenous people around the project, and a project that has tremendous capital efficiency. And then to add to that, I would also add the de-risking we've done over the years. As I said, we've spent well over $1 billion at KSM, not just in exploration and engineering, but also in permitting and now mine construction activities.
Metal prices, safer jurisdiction, permitted, and what do you think is more important to the potential JV? Copper, gold, between those two?
Depends who you're talking to. Yeah, this is a project that is so big that the universe of potential partners is quite small. Practically speaking, there's maybe 7 companies on the planet that have the technical, financial, and social wherewithal to take on a project like KSM that we would be comfortable partnering with. So it depends if you're talking to copper companies, it depends if you're talking to gold companies, but this is a project that checks the boxes for both sides.
Steve, I think the Rule Classroom people likely suspect that given that gold companies traded higher multiples of free cash flow than copper companies, well, Rudi will be smart enough not to answer this question for us. I suspect that the list of gold companies that were able to raise at a reasonable basis the upfront capital suggests it would likely be a gold rather than a copper company that will do this. But I think all Rudi can do to that is smile.
And say no comment.
Usually the guy with the lowest cost of capital wins in a capital intensive deal. I'll just leave that there.
Okay, that put us down one section of the why. Okay, CapEx question. So if my research was right, it's about 6.5 billion US is the last document said is about how much it would cost to build this thing. Does that sound about right,
Yeah,
Rudi?
that's correct. That was an estimate that was done in 2022. Clearly, there's been some escalation in prices since then. We all know about inflation, but offsetting that has been the work we've done on site construction activities. We've now built roads, we've built camps, we've built fish compensation areas, we've built bridges, and probably most importantly, we've now tying into the power grid that gives us cheap hydropower for the life of the project.
What parts of that CapEx are most vulnerable to inflation?
Well, we're fortunate that all of our energy needs comes from hydro, so we're not subject to a lot of impact in terms of diesel or natural gas costs. Probably the biggest is just the cost of labor and the skill sets you need at a project of this scale. I mean, during construction activities, we'll probably have 4,000 people on site working. During operations, we're probably pushing 2,000 people. So it's a lot of talent you have to bring in. Not all that talent is readily available close to the project. So in a lot of cases on these remote projects like KSM, you're bringing in talent from around Canada and elsewhere.
Okay. Do you have anything, Rick, before I go into Tudor?
Oh, lots.
Okay, go ahead.
Lots. I mean, you've covered the basics. I just want to drill a little deeper. Rudi, how much of what would otherwise be considered owner's capital do you think you've already spent on the project? In other words, let's assume XYZ Corp was going to come in. How much by way of pre-construction capital expenditures do you think you've made that comes off somebody's total bill?
Yeah, so by the end of 2023, we had spent $444 million Canadian specific on construction activities. Subsequent to that, we probably spent another 250 million Canadian on top of that. So just in terms of construction activities, we're pushing $700 to $750 million Canadian already on site-specific construction.
Importantly, rear looking, meaning really truly inflation-adjusted dollars because they're spent.
That is helpful.
Yeah. Can you tell me, you described capital efficiency. The knock against the project was always at the then prevailing commodity prices, that the net present value of the project was low relative to the upfront capital cost, and the ability to amortize those costs over time was problematic. Can you talk about the capital intensity, which is to say net present value relative to CapEx at today's commodity prices, and what the likely payback period would be at today's commodity prices?
For sure. So when we did the pre-fees in 2022, we used 1740 gold and 353 copper. That project estimated capital at the time of 6.4 billion, and it estimated an NPV at those metal prices after tax of about $8 billion. So a little, maybe 1.2 times capital for the recoupment. At today's metal prices, if you use $4,400 gold, and I haven't even tried it with a $6 copper yet, but if you try it at higher copper prices, you're looking at an NPV that blows up to $35 billion after tax US. So even if there's escalation on the capital side beyond the 6.4 billion, and there will be, I mean, let's be honest, you're still looking at a project that's tremendously capital efficient, looking at that ratio between NPV and CapEx.
So for note to the classroom students, Jonathan Goodman taught us last year that he looks at a project with NPV at least twice upfront capital. Rudi, what would you anticipate the payback period to be?
At today's metal prices, it's less than 2 years. This project out of the gate, because there's hardly any strip at the deposits that get mined as open pits. This generates cash flow almost immediately. Some of the better grades are closer to the surface, which helps in terms of payback period. But at today's metal prices, you're looking at a project that pays back, even if the capital goes to $8 billion. I'm not saying it will. The project still pays back in about 2 years.
And speaking of grade, can you describe, first of all, what the life of mine grades are, but then perhaps more importantly on a net present value basis, what the first 3-year grades are, if you have that information available?
Yeah, I have to go back and look that up, Rick. It's been a while, but So I like to look. I like to look at it. I like to look at it in terms of um, cost of production.
Yep.
If you look at this project, because gold is the main product, clearly, we then have copper, silver, and molybdenum. If you take those three metals as byproduct credits, the life of mine cost of production at today's metal prices is less than $500 an ounce. And that includes the upfront capital costs amortized over the life of the mine. So it's tremendously efficient in terms of the low cost per ounce of gold produced. Life of mine, we've artificially limited our mine plan to what we have permitted in terms of tailings capacity. We now have 15 billion tons of economic resources contained in our 5 deposits. Our mine plan, our PFS mine plan, limits production to only 2.3 billion tons because that's what's permitted. That 2.3 billion tons gives us an initial mine life of 33 years, averaging just over 1 million ounces of gold production a year and nearly 200 million pounds of copper a year. I mean, this project is truly world-class. And again, that's only capturing about less than 20% of our known resource.
Sorry, Rudy, my old ears missed the silver production. What was that?
Well, silver production is about 2 million ounces of silver a year. Not a lot of silver.
Got it. But theoretically, in terms of the capital stack, streamable, given that silver cash flow seems to enjoy the highest multiples of all. Could you tell us something about the so-called redundant assets in your company, the other assets that you have, and what value you might be able to realize for shareholders in those aspects?
Funny you should mention that. I'm actually in Toronto this week. We have a shareholders meeting tomorrow where shareholders will approve the spin out of our Courageous Lake asset. Courageous Lake is a large project we have in the Northwest Territories. We have, I think, 11 million ounces of measured indicated resources there, open pitable at a grade better than 2 grams per ton. I would say that Courageous Lake, because it gets lost in the shadow of KSM, probably generates very little value to our shareholders, which is why we're spinning it out. We want this asset to drive value to our shareholders. And the most efficient way to do that is take 100% of that asset, put it in a separate public vehicle, which we're doing, and spinning it out to our shareholders in a separate public vehicle. So you're going to have basically a dividend coming your way in terms of common shares of another public company.
Any anticipation as to what market cap that might command?
Well, if you do comparables, we can all think about some big other undeveloped projects in Canada, maybe one in the Yukon. Just on an NPV basis, we actually did a pre-feasibility study at Courageous Lake in 2024. At $1,850 gold, the NPV of that project was about $500 million. At today's gold price, the NPV of Courageous Lake is north of $3 billion.
That's the market cap of Seabridge, right?
Market cap of Seabridge is about $3 billion US, correct? So this is a project on its own. It should generate $5 to $10 of value per Seabridge share if done properly in terms of getting the market type awareness that it should generate.
And this isn't prospective value. This is value that people might, assuming that the vote goes the way that you expect at the shareholder meeting, this is value that might be distributed to shareholders soon.
Very soon. I think I just looked at the voting totals and with like 99.9% in favor. Who doesn't like a free dividend, right?
So you might describe yourself as confident in the outcome.
Yes, I don't see any risk of this not passing. Now, we're doing it through a plan of arrangement in Canada. So after we get shareholder approval, we need to go get the stamp approval from the court. We then press the button with computer share. And then hopefully by somewhere around June 3rd or shortly thereafter, shares of Valor Gold, that's what we're calling the spin out, should show up into the accounts of our shareholders.
And are there any other assets in Seabridge other than KSM? And might you, if the answer to that is yes, catalog them for us?
Yeah, so I've been lovingly called the garbage collector of the universe. Where in down markets, I go out and buy things very cheap because big companies are willing to sell them cheap. One asset that we bought very cheap in 2016 was an asset called the Iskut property, which we've now renamed Bronson Corridor. We bought this asset with the belief that it could be another KSM. We already now have 2 deposits defined there, the Bronson Slope deposit and the Snip North deposit. In fact, the Snip North deposit, we just announced our maiden resource on earlier this year, where at the first round of drilling there generated about 9.5 million ounces of gold at this deposit, plus over 1 billion pounds of copper. And again, this is probably an asset that's not generating a lot of value right now. Again, everything is lost in the shadow of KSM. But as we move this asset forward, especially after getting, hopefully a joint venture on KSM in the not too distant future, we can start to get some value for this asset as well, especially if it does turn out to be another KSM.
And you might refresh the audience's memory as to what Snip was.
Yeah, so Snip was a underground mine operated there. I think it was Barrick there operating that, Rick, at one point?
Barrick, Homestake. Was it Homestake? Who did Snip?
I forget.
To who? You know what? You're taking me farther back in memory than my memory goes.
Well, the old Snip mine now is part of Skeena Resources.
Correct.
And it's a project that they hope to actually use as a mill feed into the SK project that they have and are advancing.
Correct. And you're the backside of the old Snip deposit, basically, right?
Yeah.
So let's get to the ugly part. Let's get to Tudor. And I probably shouldn't ask you. Well, actually, I should ask you to describe the nature of the dispute. Obviously, you're going to do it from your own point of view. There are going to be several people on this call who don't know what Tudor is or what potential obstacle that is for you. But if you could give us an overview of the dispute and then tell us from your point of view why you believe that's not unlikely to hold up its redemption.
Sure. So KSM, we have 2 sides of the project. We have the mine side that hosts the 5 deposits, and we have the mill side and the tailings facility that sits about 22 kilometers away from the mine side. During our environmental approval process and also during our construction permit process, we now have a permitted tunnel called the MTT, at least most of it permitted, that runs through ground held by Tudor. Matter of fact, of the 22-kilometer tunnel, about 12.5 kilometers runs through Tudor's ground. We started working on this tunnel design back in 2012. In 2014, when we received our environmental approvals, we also got specific tunnel rights, including a license of occupation, a mineral reserve, and the M245 permit, which gives us the ability to construct the tunnel portals and a portion of the tunnel length. These were all put in place well before Tudor arrived to the scene in 2016. In 2021, Tudor announced the first mineral resource estimate. Since that time, because the tunnels goes through the mineral resource, they've been challenging our rights with the government again and again and again. And every time they put forward a formal challenge to the government has come back and said, no, wait a minute, Seabridge did this properly. They went through the proper authorization process. They had the support of the Indigenous people in granting these authorizations, and their rights are valid. Obviously, Tudor didn't like that answer. So they went out to challenge the government even further. They filed a civil claim in Supreme Court of British Columbia against the government, claiming that the government didn't have the authorization to grant us the authorizations we have. So that now is in front of it's a process. The government just replied to the civil claim a few weeks ago. In their response, the government noted that that the approvals that we have were well in place before Tudor showed up. Tudor should have done their due diligence on that and note that this could impact future aspects of the project. And also the government, quite interesting, put forward that the action from Tudor is statute barred under the Limitations Act in Canada, where if you have a dispute like this, you need to bring that dispute within 2 years. And we're now going almost a decade since they came into the project.
So what would you expect, how do I frame this correctly? Assuming that we had a resolution of this in civil court, how long would you expect it to take for you to get a summary dismissal or some other judicial satisfaction if it went that way?
Too long for my liking, Rick. I mean, the fact of the matter is nobody wants this to go to trial. Tudor wants to find a workable solution. Joe Ovesnick, the CEO, has talked about that. I've known Joe for a long time. Joe and I have done deals in the past together when he was at Pretium, and we were looking at the Snowfield deposit, which we eventually bought from Pretium. We did layback agreements between the two companies, access rights, and we actually did a joint PEA looking how Snowfield could fit into the greater KSM. There is a solution to this. The problem is we don't, and the solution is we can flex a portion of our tunnel and avoid a mine plan. The problem is they don't have a mine plan yet. They've been working on this now since 2016. They've had 3 mineral resource estimates filed, but no mine plan that's been put forward that we can sit down and say, okay, if this is your mine plan, we can flex a portion of the tunnel around that. We've kind of did some, obviously some calculations and scenarios to look at if it's big open pit, how would you move the tunnel? If it's a big underground block cave, how would you move the tunnel? But now, fortunately, at least from our side and probably from Tudor's side as well, they're looking at a much smaller, higher grade project that they hopefully will finally bring to PEA over the next few months, where we can sit down and say, okay, here's your mine plan, here's the solution, let's get on with life. And that's our planned path forward.
And what makes you think that a potential joint venture partner wouldn't want to wait until that had occurred before they went?
Because they've done their due diligence on this as part of their analysis of the opportunity, and they've come to the same realization that we have. There is a solution here. We'll work through that solution. And on top of that, every time Tudor has gone to the government to have things turned around in their favor, the government's come back on our side. So
am I correct in my understanding that you have narrowed down the field of 7 or 8 potential joint venture partners to 1?
Yes.
Notice, ladies and gentlemen, that was the index finger, not the other finger. It's pointed at me in these interviews. I have to make that perfectly clear. Those of you who don't see well, Rudi and I have known each other for 30 years, and it's mostly been pleasant.
Agreed.
Rudi, if you could talk to me about the nature of your relationship with the host governments, in particular the Tahltan, but also the Nisga'a.
Yeah, so we work very hard on our First Nation relationships. It's number one, you have to, but number two, it's the right thing to do. And before we even started bringing this project to the government, I went down and sat down within the locations of the 5 First Nations to introduce who we were, what our plans were. And even back then, we were talking about this project being too big for us to do on our own, that we needed a partner. So we have an impact benefit agreement in place with the Nisga'a Nation. We have an impact benefit agreement in place with the Tahltan Nation. And we have the continued ongoing support of the Gitxsan Nation. Matter of fact, when we started to do the site construction activities at KSM, because we had an impact benefit agreement in place with the Nisga'a and the Tahltan, they were competing for work, which was kind of, it wasn't, so you give a job to the Tahltan Nation, the Nisga'a Nation was not happening, vice versa. So we suggested, look, if you guys can find your way to form a joint venture, we'll give you all the work. And sure enough, they listened to us. They formed the Treaty Creek Limited Partnership. And now of the $750 million we've spent on site-specific construction activities, almost half of that has gone to First Nation-related companies. So they are seeing the benefit of that.
Good for you. I know when our mutual friend, Bob Quartermain, was operating Brucejack, I don't know much about since, but when he was operating Brucejack, he confided in me that far from being a burden, that employing Native workers who lived there was a benefit. You didn't have to fly them up from the south, and unlike people from the south, they wanted to be there because they lived there. Has your experience with an Indigenous workforce and Indigenous contractors been a have to or a get to? Has it been positive or just something?
Extremely positive, Rick. I mean, we want to hire as many First Nations people as we can for the project. Having them being qualified is important. And fortunately, the Nisga'a Nation and Tahltan Nation have basically built organizations to build companies that can provide the services. For example, we're going to do some more road construction this year at KSM. We're hiring a Tahltan-related company for that work. We're going to do some test pitting in the tailings facility area to look for aggregate that will be used during construction. and we're doing a lot of that work with First Nations related companies. So again, being able to hire local is a lot better than having to fly somebody in from Ontario or Quebec to do the same work.
You mentioned over $400 million in construction expenditures. What, if you know it, might be the benefit to the nations in terms of their call on the provincial tax? In other words, how much money will they get as a consequence of your production activities?
So there's a 10% mineral tax that goes to the government, and it actually starts to kick in at that level after recoupment of capital for the builders of the mine. At that point in time, they share in that mineral tax, and that's up to the government and the First Nations how they split that up. In addition to that, however, we also granted the Tahltan Nation a small royalty in the project, so they have an economic benefit there, and we granted a net profits to the Niska Nation as part of the impact benefit agreements. And by the way, they've now sold that net profits to the nation's royalty, which is now one of our bigger supporters because they want to see KSM get built. So it's not just about the mineral tax; it's about the other financial incentives we provide. It's about the contracting opportunities. It's about the training, and it's also the commitments we make to the local communities in terms of supporting health and safety and hospitals and stuff like that.
Note to listeners, those of you who attend the Natural Resources Investment Symposium will have the opportunity to address all of these same questions to nations royalty and get a third-party view from the Nisga'a and Tahltan nations about their own relationship with KSM and the value that they see in that free cash flow. It's always great to get a second opinion, and people who attend the conference, either live or live stream, notice that subtle commercial, will be able to interrogate both Rudi and, of course, nations royalty. Rudi, I think another interesting story that you've alluded to that's very valid up there is the fact that, I've been going up there like you for, I don't know, 30, 35 years, since the original SNP,
Okay.
which is so long ago, I can't remember who owned it. At that point in time, you used to have to fly in supplies and fly out gold. And I always remember that the SNP airfield was littered with broken aircraft, which always, well, let's just say it was disquieting when you flew in. The power there was all diesel gensets. Can you talk about the change in infrastructure with, in particular, when you say hooked up to hydro, you're hooked up to local hydro. It's not like you're bringing this power in from the BC grid, right? The change in infrastructure up there has been astonishing.
It's absolutely remarkable. I remember the first time I flew up there and put my boots on the ground. It's like, wow, this really is a challenging jurisdiction because there's nothing here. That was in the year 2000. You go up there now, you have road access right to the front door of Pretium, right to the front door of KSM. You have the Northwest Transmission Line that goes right up Highway 37, which we're tying into now. We've now contracted with BC Hydro. I think we spent about 160 something million dollars already with BC Hydro to construct the switching station. We'll have line power to the front door of KSM, which is all hydro sourced. And last but not least, in the town of Stewart, we now have 2 year-round ocean-going port facilities, one that's owned by the Tahltan Nation and the other one that is separately owned. So we can bring supplies in by truck off of ship. We can ship concentrate out by road to the port of Stewart. We bring our power right up that Northwest Transmission Line. We buy off the grid for about 5 or 6 cents per kilowatt hour. And we have year-round road access maintained by the government. So, the 20 some odd years that I've been involved with this project, it's remarkable to see the infrastructure. Fortunately, Rick, that's mostly been put in with other people's money.
As though $1 billion wasn't enough, right?
I got a quick question here. Going back to the mineral tax, this is just a neophyte question. So does that mean that the government takes 10% of whatever you pull out of the ground? Is that
no?
Is
It's really a net profit, Steve.
okay?
Yeah. So you deduct certain costs against that, and then it's based on a net profits type calculation.
And basically, it's written into the agreement that they don't have to. The government's not taking anything until whoever the JV is comes in and recoups what they spent building the mine?
Yeah, there's a small tax before it goes to the 10% level. And it goes to the 10% level. I think it's after recoupment plus another 30% on top of that, if memory serves me correct.
Okay. Okay. And the royalty that Nation's royalty has is they're basically taking from the taxes that the eventual builder of Seabridge would pay. Is that accurate?
Yeah, so they will get a direct net profits from KSM directly. And they also, the First Nations in the area share in the mineral tax that the project will pay to the government. So they get kickbacks from the government on that mineral tax that's paid by our joint venture.
Okay. Okay. All right. Thank you.
Rudy, what remaining permitting hurdles do you have?
Yeah, so the one that's in front of us now, Rick, it's the one that's being challenged. It's, you know, we have the license of occupation for the tunnel. We have the M245 permit, which gives us the right to construct all the tunnel portals and the first 100 meters of tunnel length out of each of the portals. We have a license of occupation, which gives us the right to be on the ground to do this work. We needed an amendment to the M245 permit, which would give us the full construction length of the tunnel. We applied for that. As you would expect, it was opposed by Tudor. And the decision maker now, the statutory decision maker, would like to see us resolve our situation with Tudor, either through the lawsuit where the court resolves it or between ourselves and Tudor. Again, as I said, nobody wants to go to trial. I am hoping that we can sit down, find a solution here that works for both sides, and we can each get on with our own respective projects.
And any permitting with regards to critters, you know, grizzlies?
Oh, bugs and bunnies, yeah. I mean, you're always dealing with, yeah. There's a lot of data collection that's required year in and year out. A lot of monitoring that's done. I think one thing that I never took into account how you have to build up an environmental team to do a project of this scale.
Right.
I think we now have 50 employees in the company, and probably more than half of them are dealing with the environmental aspects of the project.
You know, I have to say, in the lower levels of your project, I've never been there and not seen a grizzly, so I can understand that part of the critter issue. And by the way, never had any problems with them. I'm just trying to say.
I think the other benefit that we just realized is KSM was just named a priority project in British Columbia, right, which really helps us in terms of future permits we're going to need. And I think will eventually come back and help us on this M245 permit as well. Being named a priority project gives you more certainty in terms of timing of getting permits approved and having a designated person on your project as the champion.
By designated person, you mean a provincial person?
Correct.
Somebody who's in effect an ombudsman for you.
Yeah.
Assuming, just for fun, that it takes you, say, a year to get a joint venture partner, how much money will you have to spend over the course of the year on G&A, on pre-construction, on that sort of thing? And how does that number correspond with the amount of money that you have available to spend?
Yeah, so we still have, I think, last count we had $130 million in our Treasury. So the Treasury was still decent. I think if you look at it, if you just wanted to basically do the holding costs, keeping all the camps open, keep the employees employed, paying the costs associated with the holding fees, site access, it's probably about 40 million Canadian a year in terms of holding costs. So we've got multiple years in the bank already for holding costs going forward. Now, we want to spend more than that each year, and that's where a partner comes in. The conversations we're now having with we call them our preferred partner, we're honing in on what is going to be the final design elements of the bankable feasibility, because that's what comes next. You don't want to go into a bankable feasibility study only to have your partner say, I wouldn't have done it that way. Why'd you do it this way? So we want to make sure that we're aligned in terms of final design criteria for the feasibility study. And the other thing we want to do is continuing to de-risk the asset through early site construction activities. As I said, this year we're going to do more road construction at the project. We believe that our partner sees the merits of that as well, and will continue to fund those types of activities as the final feasibility study is being completed.
And those pre-construction activities, I take it, are all included in permits that you already have in hand?
Correct.
In terms of pre-construction, I understand that your resource envelope is formidable. But one can never have enough high grade. Are you continuing to explore the deposit or delineate the deposit in any fashion? And if so, how much money might that consume?
At KSM, no. Most of the drilling that we're doing there this year is related to feasibility activities, a lot of geotechnical aspects of drilling to make sure that we have all the data we need for final engineering designs of foundations and other structures. So in terms of exploration at KSM, no, we're not doing any. Although I will tell you that our geologists believe there's probably 2 other deposits there that we've actually hit into in the past, but we never really followed up. You know, you look at a project like KSM, we've got 15 billion tons of resources. It takes us 33 years to mine less than 20% of that. Adding more tons of the same grade above and beyond what you have doesn't do much. You know, finding a higher grade deposit there, that would be a big help. We have not yet found one. Maybe there is some opportunities there. Obviously, our next door neighbor is Brucejack. They have higher grades there. And right now, we actually have had some intercepts. I remember one intercept we had at the sulfurets deposit. I think we hit 2 meters of 1,551 grams per ton. But we couldn't piece it together in terms of a high grade zone. But there is high grade throughout. You know, when you have these big porphyry deposits, Rick, as you know, there's going to be some areas of higher grade than others.
The probability that with that much mineral moving through the system, that there isn't some place where there was historic rock preparation that allows, you know, better precipitation, I think the probability of that is nil. The question is, of course, in 15 billion tons, finding it.
Yeah, that's right.
That might not occur. Rudi, you've been involved in mergers and acquisitions, you've been involved in building mines, you've been involved in mining plants, all that kind of stuff, as long as me. One of the things that I'd like you to describe, and I think this inures to your benefit in terms of your story, but I think it will also benefit the people watching this interview who come mostly from other walks of life. Talk about how net present value calculation understates the value of long-lived reserves, which is to say it doesn't include any value for the tail cash flows after the discount. And it also doesn't take into account the fact that deposits like this are usually put into production when there's sufficient reserve and resource to justify the upfront capital investment, and any sort of grade or exploration upside you get is for free. If you could talk about that from your own financial background.
Yeah, I mean, you just look at the calculation of net present value. Anything beyond year 10 or 15 or 20 is worth 0 today in an NPV calculation. And that's just the way the math works, right? But so at KSM, you go out and do the first 20 years of mine life. Most of the NPV is captured in the first 20 years. You then have another 20 years beyond that that's not getting any value. But in year 20, all of a sudden, I've got all this new net present value in front of me. I think there's been more recognition of this, Rick, here recently. I know Robert Friedland talks about it quite a bit now in terms of, I think he calls it the stupidity of the mining analyst, basically neglecting the tail that's left over of deposits. I know David Ibin, one of our big shareholders at Copernic, gets the idea of optionality, and that's being lost in a net present value calculation. But the fact of the matter is, all the great mines of the world have been producing metal for decades, generations. And that's what KSM is going to be. So an NPV calculation is fine, but again, recognize that NPV is only capturing less than 20% of our resources, and anything beyond year 20 is 0. When you get to year 20, you can start that all over again. You've got another NPV in front of you. Then you get to year 40, year 60, year 80, and year 100. And that's the opportunity here at KSM. And I think that's one of the big drivers on why we're going to get a deal done. Yeah, the economics are great. It's big. It's got a lot of metal. The costs are good. But it's the multi-generational potential of this project that's going to drive the company into this deal.
You know, it's funny. I had dinner with our mutual friend Pierre Lasson last year in Zurich, and he was talking about the fact that Franco-Nevada, after 40-something years of producing in northern Nevada, has more ounces today than they bought 42 years ago.
Yep.
I'm struck with the fact that when Pierre was in his 30s, he wouldn't have thought so much about that net present value. But now that it's in his 70s, it comes in awful handy. You know, it's that reset becomes very, very important. You know, an important thing I like to ask as an analyst, and I think Steve will get this one, you anticipate all kinds of cool things that you can talk about. But the truth is that me looking at your deposit over 25 years from the outside is very different than you looking at your deposit from the inside. What would you suspect that I've forgotten to ask you about KSM? How have I been derelict in my job?
Rudi, you've been talking about a joint venture for more than 15 years. What the hell is taking so long?
Okay.
I think that's probably a fair question that I get quite a lot. You know, I think early on, as we advanced the project, you know, with exploration in 2011, 12, and 13, there was skepticism by the big companies whether we actually can get this project permitted, right? We got it permitted in 2014. All of a sudden, things opened up, dialogue ensued with the potential partners. And then unfortunately, 2015 happened, where the gold price had dropped from 1,900 in 2011 to 1,050 in 2015. And guess what? The big companies that would be the partners, they were not doing deals. They were trying to survive to make ends meet at 1,050 gold. So that kind of shut it down. We then advanced the project even further, and then COVID hit. COVID shut things down for a number of years in terms of the ability for anybody to really even get on the ground to do due diligence, let alone commit to a project of scale. And then finally, the last piece of the puzzle that we had to go through in de-risking to attract the partnership is, yes, we have our environmental approvals. We received them in 2014. They were set to expire in July of 2026, just a few months from now. That was a risk that big companies saying, okay, I step into this project and within a year or two, I've got to start the environmental assessment process all over again. Fortunately, in British Columbia, there's this concept known as substantially started, that if you can get that designation, your permits are then good for the life of the project. So we went out and secured Rick from your old shop, from Sprott, we've secured a $375 million US in project financing for construction activities. We went out and did the work, building roads, building camps, building bridges, tying into the grid, and then applied for that designation in January of 2024 and received the designation in July. Fantastic. That was a major de-risking that really kickstarted joint venture discussions again. And then unfortunately, another group called the Tsawwaski decided they were going to come in and challenge the substantially started designation. They filed for judicial review. We had to go in front of a judge last late September, early October to plead our case along with the government. And now it looks like we'll finally get that decision here from the judge over the next few weeks. Fortunately for us, though, even if it comes out on I don't see how it can, the work we've done, but even if the judge comes back and says, we want the government to reassess the decision, or we want you guys to spend more time in consultation, of course we can do that. But we also have another application ready to put into the government, because subsequent to the first application, we've increased our spend from $440 million to pushing $700 million now. So if the government felt it was substantially started in 2024, I think they're going to come to the same conclusion.
And for the record, the other host nations are not opposed to substantially started designation, the Tahltan, the Nisga'a at all?
No, in fact, they actually provided letters of support when we put our application in, asking the government to grant us this designation, which they did.
And for the benefit of our listeners, how many band members are in the dissenting band?
50. So when you 50. So when you weigh that against the Tahltan Nation, the Nisga'a Nation, the Gitxsan Nation that are in the thousands, right? It's hard to see. And look, we work hard with all First Nations. As a matter of fact, the Tsawwaski, although they took us to court last year, we're still giving them work at the project, right? You know, it's important that you do that because they are your neighbors and they were there first, and you've got to engage with them.
Right.
You know, one of the challenges I see with the whole permitting process in British Columbia, right now, there's no definition of what constitutes adequate consultation with First Nations.
Right.
And one of the reasons that the Tsawwaski, they came out and said, we don't think that the government or Seabridge adequately consulted with us. Even though we reached out to them again and again and again to try to get them to the table to consult, they didn't show up. How do you adequately consult if the First Nation is unwilling to sit down and consult.
Or in their case, frankly, with 50 band members, unable.
Right.
One of the things I've liked about the Golden Triangle is that the Tahltan and the Nishka now have adequate capacity. When I was first up there, you were explaining things to the band, but they didn't, within the band, have the capacity to know whether you were telling them the truth. And given the historic relationship between Caucasian and First Nations communities, they had reason not to believe us. Now, you're talking to Tahltan engineers, Tahltan geologists, Tahltan accountants, Tahltan lawyers. The capacity that the Tahltan and the Nishka have, I think, is beneficial to both sides. You might comment on that.
100% so. I mean, they're very different than when I first went into the region 25 years ago. But I'll also say, though, in addition to the capacity they've built themselves, we still provide capacity funding to the First Nations so they can go out and hire the experts that they need to hire so they can actually look at this project through the proper lens. And we do that pretty much year in and year out, even though that some of these groups have the capacity on their own. We're still funding others through capacity funding so they can get the work done.
No comment. I'll leave that one.
We've got a few student questions here, Rick. If I can,
I think that's a good idea. I'm hogging the conversation. So.
All right, no, you're doing great. Okay, excuse me. Colin has a question here. Going back to Tudor, he says basically from their point of view, it looks like they need to either build the tunnels around Tudor, or basically Seabridge needs to pay them out. Does that seem accurate, Rudi, or do you have any comments on that?
I don't see why we pay them out. We were there first. We have the approvals before they came in. They should have known this when they actually did their work, and buyer beware, and they didn't. And actually, that's a comment that the government made in their response to the civil action that was brought. Tudor should have known better. They should have done their due diligence, and they didn't. But in terms of flexing the tunnels, look, 22-kilometer tunnel is a long tunnel.
Yeah.
We can easily bypass, just by a flex around, portions that we need to bypass. Our challenge, and we've said this to Tudor for many, many years, right? The challenge is that they don't have a mine plan yet that we can actually work together to flex around. Hopefully now with the PEA coming out, they'll have that mine plan that we can sit down and find a solution. And we're ready and able to do that. The problem is you can't move a tunnel and agree to move a tunnel until you actually know where you need to move it to.
Or else you might have to move it again.
Which we don't want to do, obviously.
Okay. Any thoughts? Alex is, go ahead. Do you have something else? No, okay. Alex is asking about your thoughts on British Columbia as a jurisdiction for mining. Premier David Eby has been very pro-mining as of late, and even pushing the federal government to coordinate and get stuff done. Any thoughts on him?
Well, considering some of the jurisdictions I've operated in my life, like in Nicaragua and Honduras and in Panama, I like British Columbia. It is, yeah. And look, I've gotten to know David over the years. He's been a big supporter of the project. He kind of points to Seabridge as this is the company that's done it right with First Nations. When you're going through the substantially started process, he was a big supporter of that process as well. So I like British Columbia, and the mineral endowment there, clearly what we've been able to find there is remarkable. Why go anywhere else when you've got, hundreds of millions of ounces of gold sitting there ready to be mined?
Okay, James has a question in regards to the MTT dispute, the Mitchell Treaty Tunnel. Tudor expects to get a PEA this summer. Would that satisfy your requirement to discuss an amicable solution?
100%. And we've told them that. Show us the mine plan through a PEA, and we'll sit down and find a way to flex the tunnel around that. It's doable.
Okay. He's asking if Rudi and Rick, do you expect to be drinking bourbon or champagne in Boca Raton?
I think Boca Raton's probably a little early for Rudi. If you can get this done in 6 weeks, I'll buy him anything he wants.
Well, maybe not in Boca, Rick. I hope it can be, but shortly thereafter, perhaps. But looking forward to that. And by the way, I prefer beer.
Whatever you'd like, sir.
The spirit of
Whatever's
choice.
legal. Whatever's legal.
Yeah. Z-Sold has a praise here. He says, I found the best ETF on the planet is called the Rule Symposium. Well done, sir. Okay. At Seabridge, Zahara wants to know, once the partner is announced, what happens next at KSM? What kind of development timeline would be looking at for building out KSM?
Well, we're ready to push the button on bankable feasibility. In fact, we're lining up all the different firms that'll be involved with that. We're working with our preferred partner on the final designs that'll go into that. So the next step with the partnership announcement is final feasibility with the partner funding that. And at the same time, continuing to fund ongoing site construction activities that de-risk the asset. Once a board sanctioned construction decision is made after final feasibility, the build on this project is somewhere between 5 to 6 years. So recognize there's still a long timeline to get to that first production, but it'll definitely be worth the wait.
I'm sorry, you said 5 to 6 years?
For construction, correct.
Is there any way they could kind of piecemeal this project, basically make it small, but pay back quickly? Or is it kind of like an all or nothing kind of thing? Like you got to go all in or not?
Don't take this the wrong way, but my stock answer to that is, now, why didn't we think of that? I wish there was, Steve. It would have made life a lot easier. The fact of the matter is it's lower grade. Large throughput is what makes this project work. And that's the way it's been designed. And you look at it, because the project is so spread out, you basically have 3 major construction components to this project. You have the tailing facility, you have the tunnels, and you have the water storage dam. And all those have to be put in place before first production.
Okay. All right. Martin says, good evening from Germany, reviewing the introduction to natural resource investing. Mr. Fronk, of that 1 billion already spent went into what Rick calls the social rents. How much do you need to spend in the future?
Well, hopefully our partners are going to spend most of it. That's my goal in a joint venture, is to minimize our capital contribution, but keep a meaningful interest. But this project, look, the capital estimate was 6.4 billion in 2022. We've spent several hundred million of that already on construction activities, but there has been escalation. The feasibility study will determine what the new capital estimate is at that point in time. I expect it to be higher than the 6.4 billion. But again, if you look at the capital efficiency of this project, to put it into perspective, at today's metal prices, in the first 5 years of operation, this project generates EBITDA combined in those 5 years of about $35 billion. So this project can easily withstand capital escalation, which there'll be some, but not to the point that it ever puts the economics of this project into jeopardy.
Okay. Stefano is asking, hi, Rudy. Given that the British Columbia government recently designated KSM as a provincial priority project, how much leverage does this actually give you in your ongoing joint venture discussions with a major producer? Is it moving faster because of that?
No, I'd say not. I mean, we were recognized in BC and also federally as a critical metal project for years. So we already had a designation similar to that. I mean, getting that designation is nice. It's something you can talk about. But our partner's looking at this from a buildability, from a constructability scenario. So the work we've done, the designs we've made, can they go in and build this at a reasonable time period for a reasonable capital costs? And I will say, since we've been talking about joint ventures for many, many years, the amount of due diligence that's been done, not only by our preferred partner, but by other companies, has been enormous.
Okay. Jacob has a question about royalties. He says, in relation to the KSM JV, would it be reasonable for me to speculate that a large royalty or stream would ultimately be part of the financing?
Not on my watch. I'm not giving up the optionality to gold through a stream or a royalty. We already have some royalties out there already. I think a more likely way to fund some construction activities, if we have to come up with construction towards the end of construction dollars, probably using the copper, the concentrate as an offtake. You have a lot of smelters now that are hungry for concentrate feed. And if you look at the value in the KSM concentrate, we're looking at 25 or 26% copper, which is saleable concentrate grade. We're also looking at more than 2 ounces of gold per ton of concentrate. This is a high value concentrate that I think some of the smelters in the Pacific Rim would be willing to provide pre-production capital for to get offtake rights to the concentrate.
Okay. Okay. Kind of piggybacking on what Rick was saying earlier, about some of the things that keep you up at night. What else could go wrong? What are other things that keeps Rudi awake?
Well, there's always groups that are anti-mining, and they challenge the project from time to time. We've seen that numerous times over the past 20 years. So that's always frustrating when something new comes in that, quite honestly, doesn't have a basis, but it comes forward anyway in the press. Metal prices are important, although I think we're pretty confident. We share Rick's views in terms of we're in the early innings of a bull market in a lot of commodities, including gold and copper. So I'm not too worried about metal prices. First Nation relationships, those are so critical. Companies talk about earning social license. You never earn social license. You got to build on it year in and year out and do the right things as you advance relationships. And we're dealing with 5 different groups. So it's a lot of effort from our side to continue to work on those relationships and keep all groups satisfied.
Okay. We're out of student questions here, Rick, I believe. One last one here from Jay. Hi, Rudi. Why don't you buy Tudor? Their share price has been depressed for years. There must be synergies.
Yeah, why didn't I think of that? Look, there's always that possibility. Right now, what I will tell you, when you look at their deposits, you have to go through mine plans, you have to go through permitting. That's a long process. It's an expensive process. Their metallurgy is different than ours. Their metallurgy, for the most part, is refractory in most of their zones. It doesn't work in our flow sheet. So it'll be a challenge just to bring it in. I think you would start to put material through the tunnel. You'd have to have a redesign and probably a major EA amendment to allow you to build a roaster or a clave or some other way to oxidize that concentrate you might produce.
Okay. All right. I think that's it for the student questions here, Rick. So if you guys are watching on YouTube, Twitter, or any other outlet, we're pulling the questions from the Rule Classroom Plus. So follow the links down below and join us here. Tapping on the hour here, Rick. Do you have any other thoughts? What else should we have asked?
Oh, I think we've beat Rudi up enough for today, but I would urge everybody listening to continue the discussion in 6 or so weeks at the Natural Resources Investment Symposium. I'll tell people that we've put on that symposium for 30 years now, and it's been successful because we've managed year after year after year to have exhibitors like Rudi. The attendees and potential attendees need to know that at our conference, unlike any other conference, all the attendees are vetted. All the exhibitors are vetted, which is to say, if we don't own their shares in our accounts, they don't appear on our floor, as Rudi knows well. The type of discussion that you had today is not the type of discussion that you get before other conferences, because other conference promoters, for whatever reason, don't do that. But we want our attendees to show up prepared, understanding enough about the exhibitors that they can allocate their time at the conference more efficiently. I would urge anybody who is an attendee, who is listening to this broadcast, who isn't yet an attendee, to become a live stream attendee. Again, unlike any other conference in the world, there's no financial risk to you. If you think for any reason whatsoever, with you being the sole determining judge, that you didn't get your money's worth out of attending our conference, we'll give you the money back. Absolute solid gold money back guarantee. Nobody else does that. We do it because we've offered it for 30 years, and our content has been good enough that we've refunded a little less than 0.1% of the aggregate, tuition that we've charged. But Rudi, in closing, thank you for your efforts over decades on behalf of shareholders, particularly, of course, this shareholder, Rick Rowe. Thank you, too, for your ongoing sponsorship and support of the Rural Symposium. We look forward to you having a production decision and a joint venture partner announced before the conference so that I can buy you a beer. Likely I'll buy you a beer anyway. Thank you.
Thanks, guys. Steve, really enjoyed it. Rick, as always, thank you for the opportunity. And I'm really looking forward to seeing you down in Florida.
Me as well. Honored to do this. Thank you guys for having me in. I love it. It's a lot of fun. Yes. And thank you to all the students for being here. Thank you for your support. You guys have a wonderful rest of your day.